Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, the 26th of February, 2019, just getting on to 2:25 p.m. Central Standard Time. Well, the day has been a mixed one in stocks, not going up or down much, but it has been a pronounced day in weakness in the dollar at the strength and right across the board, including the Japanese yen, the British pound. I mean, all the currencies basically gaining. And we've had a little bit of a turnaround in the metals. They were weaker earlier. They're rallying at this point in time. But this is a grain update. And as you can see, corn continuing to get beaten up with wheat and soybeans being dragged down with it. So you might ask, what's with all the trade talk that we're getting, U.S.-Chinese trade? Well, what the markets are doing is they're finding where there's value, and they're finding where they have to be competitive on the world stage, probably. As we take a look at a weekly chart of closes, for the week you're down 6.5 cents, but the market seems to be on a trajectory where it's trying to break down towards this 18-week moving average of closes that comes in at the $9 level. As you take a look at this chart, we've just been, you could almost say, just going back and forth like that from here to the rally high, back to the break low, and so on, going really nowhere in this whole time sequence. And what happened is at one phase we had this bit of a rally that ended this decline, carried up, and then got up just the other day to this high, and all of a sudden falls apart with it today. So you're still very much in what I'm going to call an area here where the market's searching for value, unable to hold the rallies. The question is, how deep does it have to go? On the break today, you did get through the 100-day moving average of closes, which puts into play then two things. Number one, on rallies, resistance starts at the 100-day at 916 3/4, goes on up towards that 925 level. If you look at Bollinger Bands, you're coming to the bottom part of them. 912.5 is that number. You hit 912.25 today, which means the market went to the lower Bollinger Band, found a reason for professional, I'm going to say, covering of shorts or whatever the heck they were doing there, but the market stopped against that number. In the meantime, momentum is trying, but hasn't done it yet, trying to turn down. Momentum came out of this area of being oversold, and that's when you had this rally, but it's not yet committed to the bearishness in the market either. It just seems to be meandering back and forth right here. In the meal market, we've stayed in an oversold territory on the momentum. The rallies have fallen short for quite a while against the 18-day average of closes. The support each time you've gotten to the lower bands, like you did today in the Bollinger Band, have turned a few days later. You said, my gosh, look at it, did bounce away from that. I have no reason to think that wouldn't happen now. In the soybean oil, as it's watching in the crush, the bean and the meal fall, well, the value hurts it. So what's happened is with today's action, not yesterday. Yesterday you tried to get to the upper Bollinger Band, didn't do it, and as you can see, that was it. So now you've stepped out of a trend. You're flat against what I'll call the 18-day average of closes. Momentum is trying to turn down, but you are not trending. In the corn market, we had this rally yesterday off the news that come on Sunday when the president had said that what's going to happen is they're pushing back the March 1st tariff date, and hopefully he can get something done with the Chinese premier. Well, that's great. The market had at first a rally, rethought the situation, closed sharply lower, and today went for the lower Bollinger Band. So where'd the market finish? Well, 376, the Bollinger Band 76.5. I'll call it basically right there, and you're oversold. But this market has had an easier time of hitting these lower Bollinger Bands, I think you'd agree, than getting to an upper band, which is another way of saying the market doesn't hold well on these rallies. In the wheat market, you have watched a market that did the classic thing I talk about. This is sideways action. And the longer a market goes sideways, eventually the bigger the move. What the market did on one day is it came up, knocked out the pattern of lower highs, lower lows, and honestly never looked back. It, yes, gets oversold, but when you come out of sideways action, if you're breaking out to the top side, you will most of the time get overbought, to the downside oversold. But it's the power of the sideways action you've got to watch. And you take a look at what's been going on here. You get a bounce or two and then you just let loose again. That's typical of coming out of this sideways action. In the sugar market, sugar has had a pretty good size failure at this upper Bollinger Band, and today it was weak enough to close both under the 18-day average of closes and the 100. Momentum turning down. Until you take out these highs, I think that as a technician, I'll say this market entered bear market territory again. The question is, can it get down to these areas right in here into the 1230s? Now, we'll find out what it's going to do, but it didn't have much of a bounce out of here. In the coffee market, this is called running the lower Bollinger Band. And it's often, not always, but often accompanied by the momentum index of the slow stochastic, if you will, getting itself to the point where what it does is it embeds. Embedded means it's just laying down and going sideways. That seems to be what we have. Cocoa fighting a battle at the 100 and the 18-day average of closes. The overall trend, lower highs, but with today's action, higher lows. We're at a spot where the market's going to decide what to do. I would say getting under 2248 is going to be a real ugly chart picture tomorrow. That will re-cement in the lower highs, lower lows. You might say to me, well, what would get the bullish picture going? Well, you'd have to first off take out all the way up here, 2236, but even then, you'd be right against the upper Bollinger Band. It's easier for me to say this thing can turn bearish by getting under that because momentum's already trying to stay down. In the cotton market, higher lows, all running into resistance at the 18-day average. So while the swing line is up, the bias is down because you closed under that. Momentum just refuses to get going one way or the other. In the cattle market, it is still a pattern of higher lows, higher highs. Bullish. Hits the Bollinger Band, backs away against it. Now it's in overbought territory. So the question is, does it back off from here or does it try to just ride that band higher? Until you take out 128.20, the bulls have control of this market. Feeder cattle negated its downtrend today. With the pattern, and I'll show you this right here, you had the lower highs, lower lows. Momentum was pointing down and the bias down. By taking out right here, this 146.30 level, the market gets over a prior high, runs into resistance first at the 100-day average. Next target is the upper Bollinger Band, but momentum is up, bias is up, not yet a trend. You have a higher high and a lower low. Last in the hog market, you're starting to get to a point where momentum is trying to turn up possibly ahead of price. And you've got the lower highs, lower lows. But you also have a higher low. Did I say lower? Lower highs, but a higher low with this. And if momentum turns up, you take out this area 5660, probably in for more short covering, could carry to the 18-day average of closes. Even if you drop on this, you refuse to embed, so I'm having trouble with the short side. You know, as you hear me talk so often, I talk about indicators, and I believe that markets like to trend. Now, catching the trend is hard. The Ira indicator does something different. It looks to see if the market made a recent high or low, and then it starts measuring how many days from that recent high or low the market went. And when it gets to a certain number, it starts displaying that as either the green line on the top or a red line will flip there as it's making the lower lows. But it's a method to define trend, and that is so hard for people. This is really simple to work with. I've put together a video series for you. All you need to do is give us a call. If you go to our website, you'll see the Ira indicator. Put up the video series. Learn from that if you'd like. Just sign up for it. We'll make sure that it gets emailed to you. You can also click up here if you'd like to be taken to the front page of our website. I'm Ira Epstein. You have a good day.